This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm your host, Kerry Lutz. It's 12/18/23, show 552. So, Nick, we haven't spoken since last Wednesday, and a lot has happened there. So let's start with that, and then we'll work up to today.
Yeah, well, last week was a very, very important time period for the markets. Fed Chairman Powell basically changed his verbiage in the statement right at 2 o'clock. And the market took that cue, they took that ball and ran with it, basically saying we're going to have 3 cuts, interest rate cuts next year. So that's a big change in what he's been doing. He's been very, very hawkish. He turned into a complete dove. Even during his press conference, he really was not very hawkish at all. It's a complete change from just, 2.5 weeks ago. So the markets have realized this, and that caused a monster surge in the stock market. It was just one of the biggest moves that I've seen after 2 o'clock in quite a long time. So Jay Powell did the trick, and the market surged. They were already up quite a bit. You would have expected him to be very, very hawkish, try to talk the stock prices down, but he did the complete opposite. And that's when markets make big moves, when they're surprised. And the market was completely off guard. So was I. I did not expect him. I thought he'd leave rates unchanged. Everybody did. I thought he'd come out and say we're going to be data dependent going forward, keep a little bit of a hawkish stance since we've had such a big run. But no, he basically said that we're going to cut next year, not in those words, but by telling you the new range of interest rates going forward was going to be lower. And that's all the market needed to hear. That's all the market needed to see. And the market has taken off since that point.
Well, let's not forget he works for the banks, right?
That's right, Kerry. And if you take a look at, say, JP Morgan Chase, right? If you just go back and look at this stock, on October 27th, the stock was trading at 135, now trading at 166. Bank of America on October 27th was trading down around $25, now trading at $34. So you see these big, big moves. And then you got stocks like Citigroup, which have had some of the biggest moves out here. The stock was trading at around $38 on October 27th. Now at $50. So these are some tremendous moves in the banks. And let's not forget the regionals, which have, were really the problem child of this market going back to this past March, where they had to do bank bailouts basically in a stealth quantitative easing. But, on October 27th, the KRE, which is the regional bank ETF, trading at $37, and now it's at 52, traded as high as 54 on Friday. So we've seen some tremendous moves here in the financials.
Can I tell you how I knew this was going to happen, Nick?
How did you know?
Housing stocks.
That's a good point. That's
because
very true.
They hit their 5-year highs. Well, they've been going up and up, since November, since October. They hit a low October 1, a little trough, and basically they were up. And December 1st, they hit their, yet another 5-year high, and every stock did it. Lennar is the one I usually watch.
That's by far the most important.
Yeah, Toll Brothers had done it a little bit before Lennar, but it's kind of like nat gas prices with the weather. The nat gas knows what the weather is going to be before the meteorologists do. Right.
Yeah, without a doubt. You could sometimes, think that home builders will go up, or even commercial real estate to some degree, when yields come down, right? Because it's a yield play, like utilities. It's yield sensitive. But this was just an unbelievable change in character by, a Fed chairman that has been so hawkish, talking about he's the next Paul Volcker. Reciting Paul Volcker's book every other week, and to just change his stance. The running joke now is, is he really Arthur Burns with
Yeah,
a mask?
people out there don't remember who Arthur Burns was, but I know what you're saying. Yeah, it's you knew it had to happen eventually, because the emergency bailout fund for all the banks kept going up and up every week.
Every week, yeah. And the balance sheet on the Fed's balance sheet, even though they're doing quantitative tightening, is not shrinking. So
Mhm.
something's not working there. But he pivoted, Kerry, and that's really all traders really need to know.
He had to, right? I mean, eventually he was going to have to.
Yeah, I think he had to, because how is the U.S. at, say, the 10-year yield gets up to, say, 5.5%, 6%. How does the U.S. service its debt?
Mm. Yeah. Yeah, well, it's a lot easier when it's 1% than when it's 5, right?
Yeah, I mean, if you can keep it low, you can service that debt, because let's face it, we've already crossed the Rubicon.
Mhm.
Everybody in this business that's been in this business 20 years or longer, that's still around, knows it. You cannot sustain $34 trillion debt load. It's just impossible. Everybody's now looking at the debt clock and things like that. Just do the math. You're not coming back from this. There's no way. So I guess it's just party on until you blow it all up.
Hey, what's the home builders ETF again?
ITB, Isaac Thomas Boy.
Yeah. So when we look at that, it's showing us exactly the same things, right?
Exactly the same thing. I mean, you can look at all these charts from October 27th, and they all look identical. Basically, you went up into the middle or late November, you went sideways for 2 weeks, and now you've had another explosion to the upside. And the markets do not look like they're done going up, in my opinion.
Yeah. Yeah. Hey, stocks climb on a wall of worry, right?
They do. They climb on a wall of worry, and they climb on a wall of easy money.
Yeah. Yeah, that's on a wave of easy money. Speaking of which, like M&A activity now, U.S. Steel is going to get bought by a Japanese steel company, Nippon.
Yeah, for $55 a share, that was announced. Everybody thought Cleveland Cliffs was going to be the buyer there. They were not. It's going to a Japan firm, Nippon Steel. They've been around forever. Stock now is up 26% on the news. This is helping a lot of other steel-related commodity types that are trading higher in sympathy, Cleveland Cliffs, Nucor Steel, and others, just to name a few. But, you're starting to see the consolidation taking place. I think we're going to get more of it, and that also can fuel higher markets as well.
Sure, for sure. So So like gold was looking like it was going to hit the skids, and then Powell makes his statement, and I wasn't watching it that day, and I looked at maybe later that night or the next morning, and I could not believe my eyes.
Oh, gold just ripped higher on the back of that news. Bond yields dropped. I mean, I'm a little bit surprised to see him pivot the way he did, but commodities in general really took the cue, gold and silver in particular. But remember, we had that big reversal day, Kerry, on the 4th of December, where gold went up to 2150. We had a monster reversal where we closed that day at around 2040. So it was over 100-point reversal back down. That usually indicates you're going to go lower. So we're going to have to watch this gold chart now over the next couple of weeks. But, that had a very, very good reaction, positive reaction to the upside after Jay Powell spoke. And basically, if you start to lose faith in the Fed, you start to lose faith in the government. I mean, we've been saying it forever. It's only a matter of time before gold is higher.
Exactly.
But now you watch that chart pattern, you have a level to go against. You exceed that level this time, it's off to the races.
Hey, one thing I wanted to point out, copper has been behaving better lately as well. It's heading back towards $4.
Yeah, copper has been behaving better lately. It's back above all the key moving averages on the daily chart. If you look at a weekly pattern of that, you'll see that copper is actually just consolidating potentially to go check or to go test the $4 level again. And I think that's probably in the cards in the near term. That's going to be a big, big area, though, for copper to get through. $4 has a ton of resistance on the larger time frames.
Hey, and just going back to gold and silver, of course, those stocks have not been leading. And that's why I was always questioning this advance in gold and silver. The stocks have
absolutely.
to lead, right?
Yes, you always, always, always want to see the miners lead the move. If they lead the move, that's a sustainable move, and you're going to get a lot more out of the commodity. But the miners have not been leading the move. It's something I talk about with my members every single day. And I say, hey, when these do start to lead the move, it's on, and we're going to go a lot higher. But we have not seen that, and it's still not the case. They're trading kind of in tandem, but the miners have not shown leadership. I mean, it's not bad action, but they have not taken a leadership role yet.
Interesting. Yeah, they're kind of sideways, but they were coming off of such a low, like an all-time low here, Nick.
Yeah, but if they set up, Kerry, and they start to really take off, then you know that the metal is in for the long haul, and this is the big one. But we're not there yet, but I don't think we're that far away. 2024 is going to be quite something because we're going to have an election year. So you think people have lost confidence in their government already? Wait till the elections comes around. This could be a wild one.
Yeah, well, we could have president taking the oath of office in a prison cell, right?
Perhaps. This world is so upside down, I wouldn't rule that out.
Anything is possible, right?
All things are possible. Yeah, that's right.
All right. Hey, finally, Bitcoin's been showing some weakness in the past week.
Yeah, Bitcoin's been doing a lot of backing and filling, but you got to remember, it's just at overbought levels. It's just so far advanced on the back of this expected news that there's going to be a spot ETF approved here, multiple spot ETF being approved. So I'm just not sure that's going to happen. The courts kicked it back to the SEC. They're going to have to make the decision. They're taking their time on this. I think the market's starting to get a little jittery. But either way, I don't think it's going to go anywhere. I think it's going to be range bound from 45,000 to 40,000 until this news is finally announced. And nobody has a clue when that news is coming out.
Yeah, I guess that's the way they like it. Well, that is it for today. Make sure you go over to Nick's site, inthemoneystocks.com. See who he's beating the averages for decades. Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. Emails welcome, KL@KerryLutz.com. And please, on YouTube, leave your comments. Please like, share, and subscribe. And Nick, we will catch up with you on Wednesday.
Sounds good, Kerry.